And welcome to the ETF Edge portion of Halftime Report. There's going to be historic trading volume this week around the big rebalancings on Friday. Tesla's going into the S&P 500, and the red-hot NASDAQ 100 is rebalancing, and it's adding new members. Our guest today, the man who participates in making those decisions about who goes into and who goes out of the NASDAQ 100. Sean Wasserman is the NASDAQ Global Head of Index and Advisor Solutions. Sean, you announced 6 new additions to the NASDAQ 100 for the close this Friday and 6 deletions as well. Can you very briefly explain the process of deciding what goes in and what goes out of the NASDAQ 100?
Sure. Thank you, Bob. It's a very straightforward rules-based approach that we take a look once a year, effective on the third Friday in December, a re-ranking of what are the top 100 non-financial companies listed on NASDAQ. So we have 6 really great, exciting new companies coming into the index, companies like Peloton, Atlassian, Okta, that really benefited from the current remote work-from-home environment that we found ourselves in, rising in the ranks and positioning themselves to enter the index.
I think the key here is that this is not necessarily a tech index. I know Apple, Microsoft, Amazon are the top holdings, but you've got Pepsi in there, you've got Comcast in there, our parent company, you've got Starbucks as well. It's non-financial, but it's not just tech, right?
Absolutely. You hit the nail on the head. For technology, the index comprises around 55% of technology, but it is quite diversified across sectors such as healthcare, consumer services, consumer goods, with all the companies that you mentioned, including other ones like Moderna, that really help to round out the index and the overall exposure that it provides.
Sean, almost $150 billion is now indexed to the NASDAQ 100 ETF. That's the triple Q. Those rebalancings are now major trading events. How do you feel that index committees like yours are now major power brokers because so much passive money is tied to those indexes?
We definitely see that trend of huge investor money going into passive investing. Within the Qs, we've seen over $15 billion of investor flows coming into the Qs. And the way we construct our indexes are very much rules-based as opposed to committee-based. So when we construct our indexes, we take that particularly in mind, making sure that the indexes can be effectively replicated and are investable for them. For example, one of the new indexes that we really just had come out is the NASDAQ Next Generation 100 Index, the next 100 non-financial companies listed on NASDAQ, which was recently launched as an ETF by Invesco, ticker QQQJ.
Yeah. Sean, thanks very much for joining us.